And now in the mothership, we also make spot BTC ETH out of London, out of Dubai. We have custody globally. We have plans to roll out the spot business globally as well. So we're the only GSIB now making markets in spot BTC ETH. There's a lot of regulatory clarity and other things that could assist us down the track, but it's fair to say we see this as transformational. And so we're trying to get ahead of each bucket as we can.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. That gentleman that you were listening to right there is Godfrey Kendrick, however you say his name. Excuse me if I butchered that one. He is a individual representative from Standard Chartered, sitting on stage with a gentleman named Paul Neuner from Telcoin, David Cunningham from Citi, Casey Wagner from Blockworks, and Eric Chen from the Injective Foundation. This is from the Digital Asset Summit that took place in October 2025 in London. We're going to be tapping into some panel discussions, showing you guys some key vocabulary like institutional FOMO and how these market participants with credentials in this space continuously tell us time and time again that we are on the verge of a massive tipping point in the digital asset ecosystem, with the likes of announcements as of recent, like these ones, showing you guys that this is happening in real time. I posted to you all back on October 18th. Check this out. I said, don't forget this year, the foundation has been laid. The frameworks are ready. This is why we pay attention to this type of research. This is a Citibank announcement stating that Citibank is gearing up to launch its first crypto custody service in 2026. The decision follows a more supportive U.S. regulatory environment and a renewed investor interest in digital currencies. Citi's global head of partnerships and innovation confirmed that the bank is preparing a dedicated custody solution for cryptocurrencies. He said the development has been ongoing for 2 to 3 years and is now entering its final stages. The service will allow Citi to hold native digital assets, including cryptocurrencies such as Bitcoin and Ether, on behalf of institutional clients. Now, the reason why I'm going and backtracking this is because of today's recent announcement. So if we come here, this is from today, October 27th, 2025, depending on when you're watching this as a recording. This was announced today, and it just goes hand in hand with what I showed you guys over 10 days ago with this announcement from Citi, while also paying attention to panel discussions where an individual representative from Citi, David Cunningham, is sitting on stage with Standard Chartered Bank, and the gentleman from Standard Chartered is saying, hey, look, we see this as transformational. This is critical technology that is going to be integrated into the banking infrastructure. And I'll show you guys that here in just one second, because that's exactly what this announcement mentions. So October 27, 2025, let's dive in. It says, today, we are announcing a collaboration with Citi that's focused on solving a key challenge. Mind you, this is a Coinbase announcement. Making it easier for Citi clients to leverage the power of digital assets and stablecoins to facilitate the transformation of value. This is why it's so important that you start to practice and work on enhancing your digital skills, utilizing your digital assets in the DeFi ecosystem as an example to generate you passive income, instead of thinking that you have to sell your digital assets to go get stuck back into the fiat traditional financial system, when in reality, everything is moving on chain. Your goal should be to focus on how you can keep your on-chain wealth, because that's exactly what these financial institutions are focused on. DeFi, yield generation, this new wallet-based infrastructure, things that we have been constantly regurgitating on the CYPRX YouTube time and time again. These tools are the foundation for integrating digital assets into the broader financial system, and we're exploring ways to make them faster, more reliable, and available 24/7. Listen to this gentleman here, Paul from Telcoin, go on to talk about how these crypto technologies are becoming integral parts of the banking system.
Well, I think that, first of all, if you look back at, and this, David was talking about the transition from first just looking at this as a disruption versus, I think now it's looked at as the technology of money, the technology of banking. And so I think from a use case perspective, when most people end up using stablecoins, they're not going to realize it's a stablecoin. It's digital cash. It's something that can be is really transparent. Another technology that under the hood you're maybe not aware of what's actually happening. In our case, like our journey started with helping draft the second crypto banking law in the United States. The first one was in the state of Wyoming, and I think that charter was really focused on how do you disrupt? How do we disrupt banking? Whereas we really made a concerted effort to cooperate with the Nebraska bankers and just in general look at it more of how does a bank get into this? How do you see this as something that can actually go mainstream? And so that's kind of our focus, and not really about viewing crypto as some value-added service that that banks can get into, but actually as the future of the technology of banking.
So he's talking about how he agrees with David, and he's talking about how this crypto technology is going to become the future of banking. Again, sitting next to a Citi representative on stage from the Digital Asset Summit in London. And now, fast forward to today, mind you, that summit was only at the beginning of October. They're making announcements and integration partnerships with Coinbase, stating that their tools that they're launching will be the foundation for integrating digital assets into the broader financial system. And they're exploring ways to make things faster, more reliable, and available 24/7. So this just goes to show that what they're telling us on stage is happening, and it's happening in real time, which leads me over to this post where I said, Godfrey K. from Standard Chartered Bank estimates 6 to 9, with the typo, I put 6 to 8, 6 to 9 more months before institutional money gets regulatory clarity to onboard into the DeFi ecosystem. He mentions one major bank is going to make an announcement entering into the space next year, and all the rest will FOMO. Lock in 2025 was another foundational year. HODL, earn yield, compound the bags, and focus on the long-term goal. Take a second and listen, and this is from the same video clip and panel discussion of the individual representative sitting next to David from Citi. This is Standard Chartered's Godfrey K.
I think it's going to be massive, actually, and I'll probably go even slightly further than the other guys. I think we have now the tokenized cash version, call it what you like. We have the tokenized money market fund stuff. We have each of these weekend liquid now. We have a large push now already into tokenized equities. We will get Clarity Act, SEC guidelines. We'll work out what we can do in DeFi, what's legitimate, what can scale in DeFi. And I think this is all like in the next 6 to 9 months, actually. And so I think if we today have something like $30 billion in tokenized real-world assets outstanding, in 12 months, we're going to be at like 300 billion. So I think you're just at that acceleration point where regulation, liquidity, and others can come together, and we can move very, very quickly. So it's equities now. It will be tokenized broader funds at some stage. Like when I talk to the real money accounts, at some stage next year, one of the main ones that possibly starts with B is going to say, okay, here's like $50 billion fund, which is now all in tokenized space. And when after that, you'll get all the FOMO from all the others doing exactly the same, right? So we're just now at that tipping point in tokenized real world asset space. And
2026 might be all about this quite seriously. And he's talking about putting your assets to work in a digital wallet 24/7, 365, which is exactly what we've been stressing to you all. Educate yourselves on over the past year and a half on the CYPRX YouTube. This is phenomenal and granular confirmation that this is taking place. Going back to the key vocabulary, he mentioned that we are at a tipping point. And he said that once this one large organization that starts with a B makes a huge announcement onboarding into the space, that it's going to create FOMO. So 2 key vocabulary words are FOMO and tipping point. Well, I guess you could say that that's a vocabulary phrase, but let's head over here. And I want you guys to take a second and listen to this Defiant podcast. Shout out to the Defiant for this one, posted just a month ago. And this is Ian DeBode, the Chief Strategy Officer at Ondo Finance. Listen to what he says, because he pretty much says the exact same thing and uses the same vocabulary: institutional FOMO.
Have more of their balance sheets in.
Yeah, historically, the big lacking factor was just regulatory clarity, right? A lot of the big TradFis will only move meaningful assets on chain if they can figure out who the qualified custodian is, and if they feel comfortable that the regulatory framework is clear enough so that internally the person who's saying, yes, please move significant funds over on chain, that they don't get into trouble. Clarity historically has been lacking. Now with the Genius Act passing, I think there's a lot of hope that clarity is coming. I do think we need the market structure bill to pass, because that will truly mark the moment where the TradFis have true clarity on how custody can work, how they can implement their custody solutions, who can actually hold these assets on chain, can that entity also hold crypto and the like. So once that bill passes, I think you'll see even more movement of TradFis on chain. But the writing right now is on the wall given the Genius Act. So the appetite of TradFis to start moving balances on chain and to prepare for that moment, I'd say is higher than anything I've ever seen. And I've been working with TradFi since 2016 on the topic. It's night and day difference.
Really? How are you seeing that?
Everyone wants to get involved. Quite frankly, everyone's worried now about, missing the moment. Because these days, I think people understand what a stablecoin is increasingly. Not everyone's there. But the whole concept of moving assets on crypto rails and making it available to a global audience, that's kind of a very easy narrative to understand. And once you understand that for a stablecoin, you can then very easily draw the parallel to broader US capital market products. So if you look at the growth of a stablecoin and even the growth of tokenized treasuries to date, it's quite easy to see how other asset classes can experience a similar hockey stick. That for TradFi is a move that they cannot miss. And they've always been comfortable putting the brakes on as long as they could be a fast follower. But the moment to fast follow is now. So there's only so many also crypto native companies that these TradFis can work with, right? A lot of them do not have the capabilities in-house to truly start moving on chain. There's not that many credible crypto native companies that can help them make that move. And so there is a little bit of, I wouldn't call it partnership FOMO going on, but these TradFis are smart enough to know that the time to move is now. They cannot miss the move, and crypto native companies only have so much bandwidth to support them. So if they want to start making the move, they need to act now.
So the time to act is now, and these institutions for a fact know it. Now heading over, since you just heard the terminology FOMO, I want to take you guys to another industry leading expert. This is the gentleman, Kevin D. Patel from KeyRock. KeyRock is a market maker in the digital asset ecosystem. This is a video breakdown from just a few weeks ago in 2025, where he goes on to mention that we are at a major tipping point.
Well, I think the main reason is that, so KeyRock we started in 2017, already back then, so 7 years ago, we were saying, eventually all assets will be digital. And, I think that's been kind of a recurring song that came back, every year, that accelerated a bit with DeFi summer, then deflated somewhat. And then what we're seeing is that we are now really at a tipping point where, the different necessary pieces of the puzzle. So not only, of course, the technology, the infrastructure, but also the regulatory framework, which allows greater and greater institutional involvement. But we see that all those different pieces are actually there now, which is really bringing us to a tipping point. And I think the purpose of this report is really to inform, is that this is not about a theoretical shift anymore. It is happening. It is happening with some of the largest institutions in the world. It's happening not only on stable coins, not only on T-bills, but also on private credit, also on equities. We're seeing the shift, and the purpose is to really inform the market about how concrete this shift is, and of course being there to support. It is in our interest as a market maker, as a liquidity provider, as an investment firm, to really see this market grow. We believe that crypto as it is today is just a proof of concept and will eventually encompass all traditional markets. And the purpose of this market is to showcase that we are now at this tipping point, because basically all the different elements are starting to be there.
Huge confirmation, again, from a market maker in this space. We're at a tipping point, and he even mentioned a point where all of traditional finance moves on chain. Last video clip that I played for you guys, if you all are enjoying this update so far, keeping you all in the loop with institutional perspectives, do me a favor, smash that thumbs up button and subscribe. No hopium, no hype here. Just showing you guys research from some of the largest names in the game. I'm not giving you guys my opinion. I'm sitting here showing you guys the opinions of the financial institutions. So if you guys enjoy that perspective, do me a favor again, smash that thumbs up button. It does help boost the algorithm. Share these video breakdowns with a friend or family member, and make sure that you all are subscribed. I just want to take you back real fast to this gentleman here, Godfrey. He went on to specifically mention how all of these new DeFi technologies are going to be integrated into the back end of the financial system, to the point where you are not even going to realize that you're utilizing DeFi or
space. And when after that, you'll get all the FOMO from all the others doing exactly the same, right? So we're just now at that tipping point in tokenized real world asset space. And the average person will end up with a new wallet in their phone, they won't know the cash part is stablecoins. They won't know the equity part is tokenized Apple stock. They won't know the money market fund is with BUIDL, right? So, and because of AI agents next year, when everyone has that as well, every time you get paid every month, an individual will be able to be super capital efficient, right? So money comes in and goes out immediately to each of these assets, and you can get in and out of them on weekends. You can do stuff in DeFi with them to get extra leverage as well. So I think we're just there now.
Maybe you will because you're educated and you know the new DeFi rails are running the financial system. However, most people will not. And again, just to reiterate, these individuals all share the same perspective. Why? Because they're likely in the same boardroom meetings. They're all buddied up. They're all partners. They're building out a new infrastructure. Bottom line, they're building out the new financial system. These are the gentlemen that are sitting in on these closed door meetings. And so we have another gentleman here from the BCB group, and he goes on to say the same exact thing. This will be the last video clip that I play for you guys, but this goes hand in hand with what the gentleman from Standard Chartered Bank said, where we're entering into an era where all of this technology will be integrated into the back-end infrastructure, and banks that do not adapt will get left behind.
And so being in the middle where we've been, tier one regulated, we have tier one banking partners that we provide, being in this middle ground, I think that's kind of what stablecoins are also doing is creating that middle ground between the TradFi world and the DeFi world. And this year you've seen more and more of that. So just in our business, the level of institutional clients that are now coming to us that want to leverage stablecoins for treasury services or want to use it for cross-border payments, remittance businesses now using it. It's already far outweighing anything of the interest last year. So the acceleration is really there. I think what we're going to see as we move into the future is I don't think we're going to get to a point in 2026 where there's whether you're paying for your coffee with crypto. I don't think we're at that, but I call it the kind of the invisible upgrade, where I think your traditional finance, is going to start leveraging blockchain technology, and you're going to suddenly experience that instead of your bank transfers taking 3 days and shutting down at 5 o'clock on a Friday, that suddenly you are able to move money globally within seconds, and 24/7. All the things that stable coins are giving, I think the traditional markets are going to start adopting because they have to keep up with it.
So you heard the gentleman right here. Again, he mentioned that they have tier one banking partners, and he just said that these banks are going to have to adopt or they're going to risk falling behind. You're listening to people with valid credentials give you their opinions about the digital asset ecosystem. Now is the time to block out the naysayers, focus on stacking and accumulating blue chip digital assets that have the ability to provide yield, so that way you can compound over time, have a long-term horizon, and grow your bags. As always, many blessings to you guys. None of this is financial advice. Always be cognizant and be aware out there, and I'll see you all in the next video breakdown.